Hey, how you doing? It's time for our weekly paper account check-in. So right now, the overall paper portfolio is still positive at about $563.99 year to date, even though not every position is green at the same time. And honestly, this is a really important lesson for beginners. A lot of people think that once a stock is down, they're doing something wrong, but investing doesn't work that way. Some positions lead while others pull back. Right now, AMD has been extremely strong and continues making new highs. And as you can see, we are up now. We've opened up this account, I think it's been about 5 weeks. And we just happened to catch AMD at exactly the right time. So that particular account was up $566. Now that's not normal, that's not typical, but we just happened to grab it at the right time. VTI is doing well. SCHD is doing what dividend ETFs are designed to do. Meanwhile, stocks like Celsius, SoFi, ELF, and Meta are pulling back or consolidating a little. That's diversification in real time. Now today, I'm looking at Celsius Holdings because it has pulled back from where we originally bought it, and I'm considering adding 20 more shares to the paper account. So a little side note, last week I was talking to you about this position I had, and I explained to us that I said I've owned at the time it was 20 shares of this company, and I've never even tried this energy drink, but I had asked coworkers and friends when I would see them drinking. I said, how do you like that? I'm thinking about investing in them, and they loved it. So I bought my first can last week at the supermarket, and let's say I actually really liked it. So much so that I'm going to use it to sub out my sodas and my coffee and the Crystal Light I like to flavor my water with. I'm actually flavoring my water with it because it gives me great energy. And I was like, now once I became like a fan like that, I went and bought 50 more shares. So I was like, I can really see a person drinking this drink and making it part of their daily, because if you drink it, you got to go buy more. It's like when a person goes to Dunkin' Donuts every day, or they go to Starbucks, and that becomes part of their routine. I can very easily see a beverage like Celsius becoming your daily routine, or you buy it every week because you ran out. So I figured I would share that. So now that it's time for us to check into this account, I also want that same confidence and conviction to translate into the paper account. This is another, okay, so let's go back to, we're adding 20 more shares today. This is another important concept. There's a difference between a company being broken and a growth company simply being volatile. Growth stocks move aggressively in both directions sometimes. That's why position sizing matters and why we scale in slowly instead of going all in emotionally. Adding slowly during pullbacks can lower your average cost while still managing risk. Now so let me just show you something on this. Because as a reminder, because currently we own 5 shares of Celsius, and so we bought it at $33.95. But now you can see it pulled back to $29.93. So we can actually get it at a better price. And analysts just adjusted their price target for Celsius to be $70 a share. So if we get this thing, that's about 100%, a little more than 100% gain if it hits the analyst target price. And last week when we talked about, or when we opened the position, Celsius, there is a chartered financial analyst that has a price target for $84 and I think 86 cents. So getting it at $30 a share and it going up to 85, that is a very nice gain. So I wanted to add that in there. Now let's talk about AMD for a second. AMD continues to show strength and momentum, especially with all of the excitement around AI and chips. And psychologically, this is where investing gets interesting because many people feel comfortable buying when stocks are falling, but when they but then get nervous when stocks are strong. But strong stocks can continue being strong. That doesn't mean we chase emotionally. It just means we learn how to let quality positions work instead of panic selling too early. Another thing I want everybody to notice is we still have almost $1,800 in cash available in this paper account. And you can see that up here where you have your buying power, and down here in the cash sweep vehicle, available dollars for my newbies. Cash is not wasted money. Cash gives you flexibility. Cash gives you emotional stability, and cash gives you opportunity when pullbacks happen like this one. You don't have to be fully invested all of the time. One of the biggest lessons I hope people take from these updates is this: small, consistent decisions over time are usually more powerful than emotional all in decisions. We are not trying to perfectly predict tops, bottoms. We're not trying to get rich overnight. We are building positions carefully, learning patience, learning discipline, and learning how real investors think through volatility. Some positions will be green, some positions will be red, but over time, the goal is that the overall portfolio continues growing while we stay calm, intentional, and disciplined. All right, everybody, let's go ahead and take a look at the charts and update the paper account. So let's pop over to TradingView for a quick second. Now, this is showing AMD. And one thing I'm going to show you here is after the market closes on Friday and before the market opens on Monday, usually around Sunday night, I go into each position that we're hold, and I go to the weekly time frame. So you can do that by clicking up here in this area, and this shows you the candle. This is all price action on this long white candle here on AMD. This is all the price action from last week. And what I typically will do is I notate the bottom of the wick or the lowest part of the candle, and I put my line here. This is low. And then I go to the top of the candle right there at the top of that wick right here, and I put another line so that when I go back down to the 15-minute time frame, it gives me an idea of what price action. So I don't need to have all of the price action showing like this. I can basically use the day. All right, so today's Monday. Okay, this is how the market opened. And then I have my low and my high. This gives me the price action from last week. So I have an idea where price is currently at is right about, AMD is right about where price ended. And so if it does like a break and a retest and price breaks above this level and then sits on top, or price comes back up to the pre-market high of this morning, if price comes up here and sits back on top and creates a new support, I have an idea where it is in relation to last week's price action. So I don't need to have so much of the chart showing because I have these little rails here. So I just wanted to point that out because I do that for every position. So when you start to notice different lines, now you can notice that we got all these lines down here and they're almost irrelevant. Like this 263 for where we're at now, you can actually delete these if you want to keep your charts cleaner, but I don't think it's going to be really necessary because we're just going to, kind of do it like that. Because if for some reason the price crashes or something happens where, I don't know, we have an earnings call and it drops down low. I mean, it seems like it's so far now, but anything's possible. So I'm just going to leave them there. But we don't need those anymore because right now we're in this all-time high territory, which kind of ties in with the lesson because when you're making all-time highs, you really don't have anything to look back to because you've never been there before. And that's what I was kind of alluding to with when we get all-time highs, sometimes people get nervous because they don't have any market structure. They're creating the market structure. The market structure is all kind of down to what's already happened. So I will adjust this line, this all-time high tomorrow after I can, because I don't want it sitting on top of the pre-market low because it gets difficult to adjust them when they're together. So that's that. All right, let's pop over to SoFi and see what's going on in SoFi's world. Now I don't have to explain that. So here we got SoFi. This is the lowest price was last week, which we can tell just from this line here. SoFi got down to about $15.50, and that's where uh, it kind of stayed. So people, actually, I think I can adjust that. Yeah, it's a little bit. It looks, yeah, it's interesting. It looks like price got stuck at $15.50, and that's the place where there was indecision. Buyers wasn't really ready to buy it quite yet, and sellers was like, well, no, we know, because we already know at these prices, SoFi is really undervalued. It is really a buy, but you got people holding out because they want to see if it's going to go even lower for whatever reason, because they either did market analysis on, like I listened to one opinion last week, and the guy was saying it had made a it's making a head and shoulders pattern, and his opinion is that SoFi is going to drop even a little bit lower. So I'm expecting that. So for me, I'm expecting it, so I'm not surprised. However, if you will notice here, it seems like the buyers are stepping in this morning, and they've said, no, we think we're going to buy. So the big dogs are in there, and now they're buying. Now, where it's going to end out through the course of the day, who knows? So I'm low key expecting potentially it to come down a little lower to complete that head and shoulders pattern before the buyers step back in. But it seems like the buyers are already stepping in. So we're just going to keep an eye on SoFi for now. Now let's pop over to Meta. Meta is the same situation. This was the lowest. Meta actually broke the 600s last week and got as high as 625. And this is how she's behaving this morning. A little bit of consolidation this morning, nothing too much. Then some people sold off a little bit, locked in profits or whatever they wanted to do to exit the position. And Meta's actually at a really good place to add because it's under 600. It's just under the $600 level this morning. Now, in my real account, I would potentially add $50 or $100 into Meta to buy a fraction share to capitalize on this good price action here. Under 600 for Meta is a really good price. But because we're in the paper account, I don't have that ability to do the fraction shares. You can just buy a whole share. So we're not going to touch Meta this morning. And Celsius, my new BFF. Now looking back to my old note, we're after earnings. These were some price targets from Celsius, according to one of the other videos. But these are outlooks over the next 3 years. And so getting getting Celsius holdings for around just under $30 a share. If it goes up to $100 in the next 3 years, that's a 300% move. That's the type of stuff I like to build, and I like assets like this because they're what I would, my opinion, they're affordable, especially for beginners. So, all right. That is that, and she's getting ready. The buyers are getting ready to step in a little bit. All right, so let's jump over to the paper account and add those shares to Celsius. All right, so we currently have, we're about $30 right here. So let's see if we can add to the position. And we're going to pop in 20 shares of Celsius. It's around 30.05. All right, you know your girl always likes to have a sale. Let's bring it to 30.05. Let's knock Alpha out of here so I can see where we're at. Yeah. All right, so we're at 30.06. So let's make it 30.05. I don't want to lose the momentum being wasting time. All right, so that will put us at $600 on IRA. Okay. All right, there we go. Now we're in. So we're in a really good spot with that. That actually makes my Monday off to a nice start. So now you will notice that our Celsius trade price has dropped down to $30.83. So now we're pretty much breaking even. And that's where once you get into the position, your goal is going to shift a little bit. It's going to become more about how can I get my trade price lower within reason. Within reason, you don't want to like add 50 shares just to do that, but you start scaling in, and when if it goes up and does a pullback, then you add a few or add a couple. One strategy I will mention that I do sometimes use is, let's say I wanted Celsius closer. All right, let me open this up and I'll show you what I'm talking about. Let's look at Celsius. Do we have? All right, this is what I want right here. Oh, we only have twice. Let's say we had 13 times we added. Like we added 3 shares, 5 shares. Maybe we did 4 shares here. And you got all these different cost bases. You will see here we got 5 shares at $33.95. Then we got 20 shares at $30.05. So instead of our cost basis per share being $33.95, it's lower. Let's say you said, well, I want all my shares at $30.05. I don't want this. I don't want this average thing in here. You can do what I typically will do on positions where I feel like I bought too high. Maybe I was being a little greedy or had some FOMO going on, and all of a sudden price really drops and most of my shares are in a lower position. You got 2 choices. You can either keep them, because once price exceeds the target and starts making money, you might want those shares at that price. Or I could do something where when Celsius bounces back, and let's say Celsius gets to $40 a share, you can sell just these 5 shares at $33.95, and then your remaining cost basis would be $30.05, and you can lower it that way. So you got a couple of ways you can think about it. And as we start working into the account and, we start checking in and watching it grow, we may address that in a later video. But for right now, I like Celsius at $33.95, and I also like it at $30.05. And if it comes down lower, we're going to add more. But I wanted to point that out, that sometimes when you get into a position at what you would think is higher than you really wanted to pay for it, you can pick the day that you bought those shares and sell shares exactly from only that spot. Like I can sell 3 shares from $30.95 now. Actually, I'm going to show it to you now because it's on me. Well, show it to them because we're going to forget. All right, let's go in here. So let's say I can go in here and we could go to Celsius and I can sell 5 shares. Oh, actually, no, we can't do that now. Never mind, scratch that. Your girl needs more coffee. Actually, no, I need more Celsius H because I would want the price to be above what I paid for it, because then we would be losing money. So we will have to wait on that one. But I will potentially show you that at some point, at least on one of the positions, because I think it's a good tool to know. So I think that I'm rambling on now, so we're going to put a pin in it. I hope you have a great trading week. Let's check in next week, and I hope you have a good day. Talk to you later. Bye.